Bandhan Mutual Fund presents MF Corner.
Hello and welcome. You're tuned into this Mutual Fund Corner YouTube edition where we discuss a lot of things about mutual funds, your investment plans and a lot more. But today we are going to talk about something very specific since we're so close to the tax deadline as well. So what should mutual fund investors keep in their mind while we are filing our returns? Let's talk about that with Rushabh Desai, the founder Rupee with Rushabh Investment Services. Rushabh, thank you so much for joining us today. It's always a pleasure speaking with you. And you know, there are so many tax brackets. There's so much that an investor needs to be aware of. For somebody who has to file an income tax return now and has some mutual fund investments or has made those purchases or sale in this fiscal year itself, what are some of the things that they need to keep in mind, at least the tax rates?
Hi, Sonal. First of all, thanks so much for having me on the show. It's always a pleasure to be on your show. There are a couple of things an investor should keep in mind, while filing their returns, especially for their mutual funds. When they're filing their returns, one is that they should pull out the detailed consolidated statement, which gets pulled out from CAMS and Carvey. The investor can go on to the CAMS and Carvey's portal and pull out the entire detailed financial year statement. This is number one. Number two, while giving all the documents to the CA, it's very important to give the P&L statement as well of your mutual funds. How much is in losses, how much is in profits, whether it is notional loss, notional profit, or realized gains or realized losses. Number two. And number three is the capital gain statement. So how much on the gains are you paying the income tax on? So if you see the rates, it's the mutual fund taxation is very simple. For long-term capital gains over and above of 1 lakh rupees, about 1 year time period, it's 10% plus surcharge plus cess. And short term, which is less than a year, it's 15% plus surcharge plus cess. Coming to the debt segment now that we don't have indexation benefit, so that the entire money, whether it is long term or short term, falls into your respective tax slab.
Okay, all right. So that's quite helpful because sometimes people do not collate all the, transactions that they've made in a year. So going to the CAMS or Carvey website, of course, is helpful. You know, this is at a time when we are going to be filing a tax return. Just to be prudent, what are some of the things that investors should be aware of before the 31st March deadline in order to get the best benefit and the best tax deductions?
So there is one beautiful category called ELSS, Equity Linked Savings Scheme, which gives you tax benefit up to 1,50,000 rupees per financial year under Section 80C, right? So this is one way of getting tax benefits through mutual funds. These products have a 3-year lock-in period, but it plays a dual role in giving you tax benefit as well as creating wealth for you over the longer period of time. But the most important thing before venturing in this category, investors should not forget that this is a pure equity category, and they may want to keep a minimum of 5 years of holding period, although there is a 3-year lock-in period, and after that investors can do what they want. But I would still suggest keeping a minimum time horizon of 5 years before venturing in this category. Number two, that apart from mutual funds, investors can claim tax benefits up to 50,000 and additional 50,000 rupees in NPS under Section 80CCD. So these are the two things I can think of. One is Section 80C up to 1,50,000 and Section 80CCD in NPS up to 50,000 rupees per financial. So all in all, under Section 80C and 80CCD, you can take tax benefits up to 2 lakh rupees per financial year.
Okay, all right. That makes sense. There's some very interesting process that a lot of investors follow when it comes to stocks, and which is called tax harvesting, where you sell something where you're making a loss and then buy again at those lower levels in order to take the benefit or set off those losses against the gains if you have any in that financial year. Is this something which is very common with mutual fund investing as well, and something investors can do?
Investors can do this, but I would not recommend investors to take this step. See, what happens is that equity as an asset class is very volatile. Okay, so there will be around 10 to 20% of drawdowns every year or every financial year. But because our markets are very mature, very strong, our macroeconomical and microeconomical data are also very strong. I would actually, on the other hand, suggest when markets fall, if your fund or your portfolio goes negative, I think putting in more money and accumulating more units is the wise thing to do. Yes, if probably a very cyclical product, not in the Indian market, say like probably in the European or the China market, if the product is going negative for a very long period of time, for example, China market is negative for a very long time. I mean, although I'm still quite bullish on the China market, but if it continues to be negative for a couple of more years, then the loss can be set off. But rather than doing this, accumulating more units, pumping in more money during drawdowns is the wise thing to do.
Okay, all right, we get that point. Last question before I let you go, Rushabh. What about NRIs? Is the taxation, some of the processes different from NRI mutual fund investors versus, say, the domestic investors?
The taxation for individual NRIs remains the same. The only thing is that for NRIs, the taxation will be deducted at source. So they should keep in mind that the TDS will be applicable. So when they redeem, the AMC will deduct tax and give you the money back. So otherwise, it remains the same.
Okay, all right. That's very helpful, Rushabh. Thank you so much for joining us. It could be an explainer for everyone who's looking to file their taxes very soon, the returns that is, and have investments in mutual funds. We'll speak to you very soon again. Thanks for joining us today.
Thank you so much, Sonal.
Okay, all right. With that, we'll take your leave on this edition of Mutual Fund Corner YouTube edition. Stay tuned to CNBC TV18 for more news and updates.
Bandhan Mutual Fund presents MF Corner.